Assalamualaikum and salam sejahtera to everyone. So we are from group 1 are going to present the role of the government, and my name is Nurul Ain binti Khalif Ali. My matrix number is 02DAT20F2061. Introduction. We will analyze the role of the government in macroeconomics. We need to focus on the type of budget, government revenues, government expenditure, and type of policy. Economic function of government. The government play an important role in ensuring the stability and economic growth on the country. The economic function of the government are many and varied. First, government will adjust the allocation of resourcing to alter the competition of the domestic output. Second, government will assist the private sector to ensure economic stabilization by controlling unemployment and inflation, which are caused by business fluctuation. Government will create a business environment which encourage competition among producers. This can increase efficiency in the utilization of resources and produce better quality product. Government will also control the power of firms enjoying a monopoly. Fourth, government will redistribute income and wealth among the population. Government will control the income disparity between the rich and poor through taxation and transfer payment. Government will provide a legal framework and a social framework for the effective operation of an economy. Legal framework include the legal status of business enterprise, private ownership, and others. Type of budget. There have three types of budget, which is balanced budget, surplus budget, and deficit budget. Balanced budget. A balanced budget occurs when the government total expenditure equal to its total revenue. Surplus budget. A surplus budget occurs when the government total revenue is more than its total expenditure. A government with a surplus budget can pay up its debt or earn interest on funds. Deficit budget. A deficit budget occurs when the government's total expenditure is more than the total revenue. A government with a deficit budget must either borrow from external or internal source or use its reserve.
Government revenue. A government can obtain revenue from many sources. There are two major ways in which a government can obtain revenue. Sources of revenue. The first one is tax revenue. Is compulsory contribution by an individual or a firm to the government to be used in the common interest of all. It is also a contribution to the revenue of the government so that the government can provide the necessary administrative services to govern the country. Under tax revenue, there are direct taxes, which is individual income, companies' income tax, petroleum income tax, stamp duties, and real property gains tax. And indirect tax also included as like import duties, excise duties, sales tax, service tax, and gaming tax. Next is non-tax revenue. Is a revenues which is arise from other sources besides tax included revenue from license and permits, petroleum royalty, interest and returns on investment, fees and penalties. For non-revenue receipts, it is included refund of expenditure and receipt from government agencies. Taxation. Features that a tax has is a compulsory payment. Second, comprises regular and periodical payments. Third, involve penalty for non-payment and less levied in the general interest of the nation. Objective of taxation is income. It is because the government uses the taxes collected to finance its expenditure. Next, 2. Equitable distribution of income to reduce the inequality of income between the rich and the poor. Also, reduction of harmful consumption such as cigarettes and alcohol. Then, regulation of forage, trade and conservation of resources. Types of taxes. There are two types of taxes, which is the first one is direct taxes and the second one is indirect taxes. Direct taxes is paid by the person on whom it is levied and cannot be passed on to another person. Indirect taxes is a tax in which the burden of tax can be passed on to another person. For types of tax structure, there are three structures which taxes are divided. First, proportional tax is a tax which imposed at the same rate for all income levels. The tax rate remains constant regardless whether income increase or decrease. Second, progressive tax is a tax rate which goes on increasing with income. The higher the income, the higher the percentage of tax. Last, regressive tax is a tax rate which falls with and increases in income. A regressive tax is the opposite of progressive tax. The higher the income, the lower the percentage of tax.
Next, government expenditure. There are two categories of government expenditure, which is operating expenditure and development expenditure. First, government operating expenditure. Government expenditure allocate to cover the expenses of operating and administering government departments. Second, government development expenditure. Government expenditure for investment purpose to improve facilities in the basic physical infrastructure. Government development expenditure is focused on development projects that can boost economic growth. Types of expenditure. For operating expenditure is emolument, pension and gratuities, debt service charge, supplies and services, subsidies, asset acquisition, other grants and transfer, and other expenditure. For development expenditure, defense and security, economic services, social service, and general administration.
My name is Nunazrina binti Muhammad Nizam and my matric number is 02DAT20F2019. And we go through the sources of public debt. Firstly, the meaning of public debt is the debt which a government owns to its subjects or to the national of other countries. If the government revenue from taxation and non-tax revenue are insufficient to meet the rising cost of expenditure, the government has to borrow from various sources. Public debt known as public borrowings. Okay, next is sources of public debt. Public borrowing comes from two different sources which can either be internal or external. Okay, next for internal sources. First, borrowing from citizens through the sale of securities, bonds, and saving certificates to citizens. Borrowing from financial institutions such as insurance companies by investing their resources in the purchase of government securities. Third, loan from the central bank where the central bank purchase government securities, bonds, and debentures from the government. Loan from commercial bank where the commercial bank invests a part of their deposits in government bonds and securities to fulfill liquidity requirements. Then, for external sources, international money markets such as some foreign exchange banks in Paris, London, New York, which have big deposits to lend any government requesting loans. Currency loans from foreign governments such as the USA, UK, Germany, and Japan for the supply of needed goods. The loan is documented in a contract. Loans from international financial institutions such as the International Monetary Fund, IMF, which give loans to its member on a short-term basis, and the World Bank, which give long-term loans for economic development on a reasonable rate of interest. Okay, next is type of debt. First, treasury bills, such as Central Bank of Malaysia, banking institutions, others mean included, insurance company, Bank Kerjasama Rakyat Malaysia Berhad and Lembaga Tabung Haji. Second, investment issue, mainly banking institutions, Islamic institutions, and insurance companies. Third, government securities, public sector including state government, statutory bodies, and public enterprises. Social security institutions, insurance companies, financial sector, foreign holders. Fourth, other loans, mainly loans to the Housing Loan Fund, market loans, and insurance of Sukuk Simpanan Rakyat. Okay, that's all from us. Thank you.